back. Well, stable for the markets as compared to the last time we spoke about it. So we have the Nifty, which is down around 151 odd points. Sensex, which is down around 541 odd points. On a week-to-date basis, it's just a marginal movement for the Nifty and the Sensex as compared to what we've seen, at least for the mid-caps, which have outperformed on a week-to-date basis. We do have a lot of cues which are lined up for the next week, so do watch out for that. The Reserve Bank of India policy, as well as the US jobs report that the street will be reacting to on Monday. But nonetheless, we do have Manisha who's joining in now to give us a roundup of what's taking place in the entire commodity market. Manisha, over to you.
Ekta, thank you so much for that. And I have a guest as well. Sanjay Gupta is MD and CEO, NCML, and he joins us on the show. And he'll talk about the agriculture markets where we have seen the Rabi numbers especially coming on the stronger side. But apart from that as well, a lot is being done on warehouse receipt side. We have seen, or there is an expectation that the AUMs under warehouse receipts also are expected to gain up. Sanjay, hi, welcome to the show. I want to start with the kind of numbers that we're looking at. Rabi crop to begin with, 7% higher as compared to previous year. The surprise clearly comes in case of pulses. But what is your overall reading on the numbers right now?
See, Manisha, thank you very much for having me here. It's a pleasure. See, as you rightly said, the production estimates have come up very higher, but we are seeing a situation of a kind of a stalemate in the market. The arrivals are much lower compared to what they were last year at the same time. So I believe this is because the prices are yet to settle in. The farmers have a high expectation of the prices, and the market somehow, as of now, the prices prevailing are lower. So we are seeing very less arrival compared to the last year, but hopefully the situation will improve going forward in the next month or so, when the prices will stabilize and realization will set in that the prices are going to be in this tone this year.
Oh, well, absolutely. When you look at the last 3 or 4 years, Sanjay, it was COVID years, and before that as well, markets were looking at slightly weakening in the global markets as well. We were looking at a slowdown in any case. How has that worked or not worked when you look at the post-harvest market here in India?
See, last year, as I said, most of the commodities, including this year, we have seen a bull run.
Right.
The prices were at all-time high in most of the commodities. But as of now, with the arrival of fresh crop, the prices have come off a little. So as I said, that the issue is that the farmers are looking at the peaks they have seen in the previous season, and they are expecting same prices to prevail. But as of now, from the buying side, from the consumer side, we are seeing a resistance to buy at those levels, especially the people who do stocking. The end consumers anyway are buying whatever is a requirement, but the stocking and the other people who do take positions in the commodity market, we are seeing a reluctance on their part to take positions on this prices, because they probably expect a slowdown in their demand, or they expect the prices to cool down. So as I said earlier, there is some sort of a stalemate in the market, and as of now, the trade is much lesser. We are seeing arrivals in warehouses is much lesser compared to the last year, because the overall arrivals are less, and whatever arrival is there, from the stocking point of view, people are not taking positions as of now.
Oh, clearly. The higher prices have clearly made farmers want to hold on to their crop for a longer time. But the kind of measures that we've seen in the last year or so from the government side also, not too many traders, stockists for that matter, are very comfortable holding long positions in warehouses too. Do you see that having impacted the markets as well? And the other thing really is about the overall futures derivative market, with so many commodities suspended, the hedging mechanism as well not available.
True, you are right. One of the key reasons is that on the commodity exchanges, a very large number of economically significant crops are under a sort of ban. Hopefully, December is the time when maybe there will be a change going forward. But as of now, there is a ban, and we have seen this reflect in the revenue turnover of the exchanges also. So just now recently, the government has lifted stock limits on some of the commodities, and hopefully going forward in the month of December, when the one-year ban period gets completed, this ban will be lifted too. So then we will see a lot of vibrancy to come in the market. As of now, there is a dull period. Arrivals are less, hedging mechanisms are not available for the players. So that is why there is a fear on both sides. The customers think if they sell it now, maybe they will see higher prices now. On the other side, the buyers are hoping, if buyers are fearing that if they buy now, maybe the prices will come off in the future. So that's the situation. As I said, maybe it will take some more time for the arrival pressure to build in, the demand also to stabilize, stock is also coming in before these prices settle, and then the marketplace will enter in a big way. Plus, if this NCDX ban or the commodity exchange ban is also removed, then this will also enable these traders and stockists to take a better position. in the market.
Absolutely. More hopeful times coming ahead. Well, that's about the overall market, Sanjay. But a final question on NCML itself. What is the kind of market share that you're holding? What are the tie-ups? You recently done one with Food Corporation of India as well. So what are the plans going forward till the time Rabi crops come into the market?
See, Manisha, you know that we are working with FCI for the storage of their wheat. And there is a small pilot on storage of rice also in 2 locations in Bihar. As of now, predominantly it's wheat. So we are building silos for them with a 30-year concession agreement and the stocks will be maintained by us, obviously, but the procurement and other things will happen by FCI. These are 10 locations in India as of now. 7 are under various stages of construction. 2 have been completed and handed over to FCI. 3 we are hopeful of completing and handing over to them before the end of this year or say this month itself.
Okay.
And 3 more, the work is going on, and another period of 15 months, we will be having 10 silo locations working in India. So we'll have 2 in Punjab, 2 in Haryana, 3 in UP, and 2 in Bihar. So this will be the total split up, and the total holding capacity of this will be 5 lakh tons, wheat and rice. And the total capex required for this implementation of this is about 900 crore rupees. So we have invested a very large part of it already. Some remaining part investment need to be done, but by the end of fiscal 24, we will have all these 10 silos up and running.
Okay, Mr. Gupta, thank you so much for joining us. And Manisha, thank you for taking us through what's happening in the world of agri-commodities. That's all about commodities, but we'll wrap on this edition of Halftime Report. And as we do that, we leave you with some global and Indian market opinion coming in from Jahangir Aziz of JP Morgan. Listen to his outlook on Fed rate hikes and inflation. And with that, it's a wrap.
Our concern is that maybe inflation is so entrenched and the labor market does not break soon enough so that that additional disinflation that is required to take it down to, comfort levels of 2-3%, that doesn't happen, and the Fed is forced to start rehiking aggressively in the second half of the year, and we have about a 25% odd probability to that scenario. So yeah, I mean there is a scenario out there where things work out this way, but not that the terminal rate keeps on going. The terminal rate is taken to 5.25. We go for a pause, and then you're forced to rehike. Rupee is clearly benefiting from the fact that dollar is weakened, and the dollar has weakened over the last 2-3 weeks, largely because of the shift in market sentiment towards how much rate hikes will be there. As I said, we'll have to wait and see where the terminal rate goes and where what happens to European growth in the fourth quarter and the first quarter. Right now, all the fears that we have about European growth going down and going into a massive recession, the recession fear is still there, but it's much shallower. And I think it is these 2 things that is weakening the dollar and strengthening the euro at this point in time. Rupee's problem has, very little to do with the dollar. Rupee's problem has to do with the fact that India is running a very large current account deficit, is running a very large fiscal deficit. It has inflation still around 6-7%, and it is providing almost no compensation for that macro risk. So I know that you keep talking about, how the FIs haven't moved in either in the equity or in the bond space, but there's a reason why the FIs haven't moved in. There is a massive macro risk on India, and there is very little compensation either in the high equity valuation or in the high bond valuation or on the high FX valuation.